Alright guys, welcome back to the channel. I hope you're all doing well. In this video I'm going to be going through the recent developments in the stock market and why it's been such a roller coaster in the past few weeks. So if we start way back, in December GameStop announced that they'd be venturing into the e-commerce space, and that caused some users on Reddit in Wall Street Bets to become more bullish on the stock and announce crazy price targets. Now, GameStop is a stock that at the time was 140% shorted. So if you don't know what shorting a stock means, it basically means to borrow the stock and then buy it back at a lower price. So if I gave you an example, let's say I had 5 sweets and the value of those sweets at the time were $5. And then my friend Billy asks to borrow those sweets and he'll pay me back in a week or two, however long. So 2 weeks later, the value of the sweets dropped to $3. So Billy only has to pay me $3 for the sweets instead of the 5. So that's pretty much what shorting a stock is. You're betting that the value of the stock will go down, and at the time, a lot of hedge funds, banks were thinking that GameStop would go bankrupt due to the fact that they're only in physical stores and not anywhere else really. So the fact that they were 140% short meant that if the price does go up, which it did, then the people who are shorting it would have to buy back their shares at a higher price, and that flurry of buys causes the price to go up even more. And that is what has happened so far and caused it to go from $20 to $300 in a month. This has happened before, about 12 years ago with Volkswagen stock. It was around the same price, $30, $40, and it went all the way up to $1,000, becoming the most valuable company in the world due to a short squeeze. Due to this squeeze that has happened in the past month, a lot of hedge funds who are shorting GameStop, expecting it to go bankrupt, have actually lost a lot of money. So Melvin Capital, which was one of the top performing hedge funds last year, have lost $4 billion already this month due to GameStop going up. D1 Capital have lost 20% of their capital this month, and that is a lot considering they make only around 10 to 20% a year. So what has happened in the past week, some more stocks that have been primed for short squeezes that had high short interest have been pumped on Wall Street Bets and other Discord chats and things, like AMC, the cinema company, BBBY, Bed Bath & Beyond, Fubo, stocks with very high short interest. And then after seeing what has happened with the hedge funds and things, trading was actually restricted on a lot of major platforms like Robinhood, Trading 212, etc. Now, why is this relevant? Because at this point, all people were banned from buying GameStop, AMC, BBBY, all of those high short interest stocks, and they could only close their positions. And what is really interesting about this is that there's no rule that is in the law that says they can do this, and if you dig into it deeper, it gets more interesting. D1 Capital, which I mentioned, they lost 20% this month. They actually invested a lot of money into the Robinhood company for their IPO, which is due to come this year. And then Citadel, which is a company that buys, so Robinhood sells information to them about order flows and what people are buying on the platform. They actually ordered the stop of the trading, and rumors, they are very high, so they're probably true. High conviction rumors that say that Citadel reloaded their shorts after and before halting GameStop stock. Now, if they did do that, then that's an absolutely criminal act, and Ken Griffith should be put in jail. So Citadel is also an investor in Melvin Capital and have actually bailed them out this month due to the losses from GameStop. So yeah, so that's basically a summary of what has happened in this chaotic week. I hope you all have a good trading week next week and stay in the best of health. Thanks for watching the video. I hope you like, subscribe. Thank you for watching.